Chapters. The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Now, Basil Chapman.
Good morning, everyone. Basil Chapman here on this Tuesday the 20th of January. We're looking at the Dow down 675, 680 at 48,673. So for my subscribers on Friday, for my hour long, or it might have been more than an hour, video, I said I'm a little cautious here because the biggies, the ones that I was talking about because of the rotation into the deep cyclicals like the GEs made a peak D at 332.78 a couple of weeks ago, and now it's just got this triangle. It's not bad. It just looks a little tight. General Motors done fantastic, but it made that peak E-top January the 8th at about 85.15. Here it is at 78.98. Alcoa made a peak D. Remember Chapman wave methodology of DEF. As soon as you go to D or high, you got to be careful. Other things can happen, and it's down from the 66.95 level to 60.05 in about 10%. Just it's not bad, but look at the fantastic move it's had on the upside, and look at the 9-period moving average. That's so far above the black 14-period moving average. But look, leg E in the weekly chart. It's just time for a rest. That's what I was talking about. And then I had this chart already, and then I just said, I can't do it. It just sounds so corny. Look, this is my Chapman Wave Dark News cloud cover. This is the chart I use. I used only the Dow daily chart for this particular technique. Had it for years and years and years, decades. And I talk about internal high and residual high, and internal low and residual low. And most importantly, what I am looking at here is there's this beautiful up channel. I've showed it in the weekly. I'll show it again in a little while. But look, this inside track, and then all of a sudden, the price starts to fail. So I call this inside an internal high, like an earthquake, and then the residual aftershock could be lower, the same, or higher. But I treat it as IH, and then pink or red goes to RH, meaning at that point you got to be really careful. So I was going to show this, and I thought, come on. Before I had they were rare. Look at this. I had them, but they were rare. They came months later. All of a sudden, they're accelerating. Well, that was telling me, especially on the fact that the 9-period moving average, I don't want to jump there right now, especially the fact that the line, that pink line, look, we were getting away from it. We were running beautifully, but then all of a sudden it started to stall. That stalling is like, think of it graphically. You've got, or even if you want, you can think of it as in terms of momentum. Look, you throw a stone up in there or a ball up in the air. There's that moment where it hits zero. It is not going up. It's not going down. Zero gravity, right? And then all of a sudden it turns around and comes down. So I look at this the same way, and I'm saying, now look at the struggle going higher. And I thought, how can I show this? Look, all of a sudden we've got inside high, residual high, inside high, residual high, inside high, residual high, inside high, a lower residual high, but then we went even higher, and then you're stalling. Sounds so corny. So I said, I'll skip it this time. I'm so sorry I did that, although I did discuss it, and I did mention it yesterday, during the week, last week, just very briefly. So I believe that 9-period moving average, which is green right now, there's a real good chance that it's going to turn pink. If it turns pink, it's going to go right to this line right here. This is the channel. In the upside part of the channel, you've got the inside track. That's a little tiny section. That's a little very narrow channel. Diagonal channel. That is where I have the inside track repellent zone. On the way down, you have the inside track. I typed it in. It was getting too messy because I said I can always use 9 and 14-period moving averages. But look at this. We're on our way towards 48,333. I'm correct that this is arching over. I needed to show that. I'm sorry for subscribers. I meant to show it on Friday, and I thought, come on. They're not going to believe me that every time we get to this residual high that we start to pull back. Well, we almost made a new recovery high, all-time high, in fact. That was on Friday. And then we pull back a little bit today, just 753 points to the downside. That's the reason why we took some profits from our long position in the Dow just the other day. So here we go. So I was talking about this. I'll go backwards. So let me just run this again. INDU. The Dow's INDU. I always do. There we go. INDU. INDU. And there's the Dow. Down 745, big red candle, gaps down with a big red candle. That's different to these red candles. Why? Because the 9-period moving average is still very strong, but both of them are turning down. When that happens, you've got to be careful. In the MACD's negative. Look, here's the gray 9-period moving average negative, 77% in the stochastic. That's under 80. It's not negative, but it isn't so great. On-balance volume is negative. Weekly chart, still looking fantastic. Look at this, 91% in the stochastic. All right, and that's what I was talking about. The inside track, this is on the upside, that inside track repellent zone. And look, we went right to the green line, and then we saw the last 2 weeks we're arching over. Now we're coming down. All right, so therefore, I'm looking at this and I'm saying there's a really good chance that we're going to have at least a digestive couple of days or maybe even a week. I'm going to go to the S&P real quickly because I've got a lot to do, got a lot of questions coming in. Oh, what was that question? Oh, I think I lost. I'll find it during the break. So we've got the S&P down 102. That's a lot of points. 102 after gapping down, after hitting 6986.33 just 6 sessions ago. And here we are at 6837. Look at that. And then the weekly chart was starting to arch over. Now, I can't call this. I'm going to go through this. I'm not going to do this now. I'm going to do this later on. But you see the doji candle from last week, and we've gapped down. I'm monitoring that really closely. Monthly chart is still fantastic in a leg B. QQQ, NDX 100. The index itself is down 400 points. 405, but this index, the QQQ, is down 9.57 at 611.63. Look, the 9-period moving average just started to turn down, and we're going to monitor that very, very closely. And then the weekly chart, just in a rectangle, digestive phase. IWM, which was the leader, is not the leader today. It's leading to the downside, 1.25%. Well, it's in the same category. It's down 3.33 at 262.44. The reason why, as we were going into that leg D, I said, let's take something off because we deserve to take it off. We've been in for a little while, and we'll see what happens with the Russell 2000 small caps. Semiconductors, have they gone a little bit lower? SMH, yes, now they're down 5.5. They were down 3 just now when I did the update at 10 o'clock. At 394.77. I've got this as a peak F. The top was at 405.31. Let me type that in. 405. I shouldn't have said the top. We don't know if it's the top. 405.71. Here we go. Leg F going to a potential peak F today. Weekly chart still very strong. Monthly chart's very good. As we go to the break, let me go to gold. I'll go straight to the GDX. That's what I was asked about. Yes, big spike to the upside of 5%, of 4.86 at 100. The GDX is at 102. I mean, really, that is amazing. We still have a small part of our PHYS, which is the physical gold all-time high, 36.26. We got it from 20. I'll be back.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
TFNN has launched the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Hi folks, we're back. So we were looking at gold, which is up 151 at 4,007. Where is this going to end? If the turmoil continues, gold is going to be extending into the 5,000 level. But let's just go one step at a time. Right now it's in leg C, still very strong. The silver SI, as the continuous contract, is trading up 5.688 at 94.16. So I've got this as an alternate count. I'm just going to give it continue that alternate count, give it an F/C. Still very strong doji candle gap up. Leg G in the weekly chart. I really need to consider this as possibly a G/C. I'll put that in. There's nothing, putting in the alternate count just says it could be this, so be aware. But so far, everything's very strong. That's all. Look, stochastic flat at 89%. That's fantastic. On balance volume is a little bit overbought. MACD is still very strong. Relative strength is coming back very nicely. 9 is way over the 14. The price is way over the 9. Nothing wrong with that picture. All right, let's go on to high-grade copper. High-grade copper is pulling back, I bet. Yep, down. 5 cents at 5.77, made a peak G top in the 6. Oh, I should have typed that in 6. Was that 617 or something? 6.15, 6.154, 6.154. Okay, and now it's trading at 5.774. Let's go to the next thing. So, question: what did I have? Oh, and I forgot to look it up. Yeah, so the question came in about lit. So this is lithium, trading quite nicely today, up 13 cents at 69.79, but it did make a potential peak F, and it could have just a little bit. It's done fantastic. Global X lithium and battery tech. Look at this weekly chart, leg B, huge leg B, getting into that resistance at about 74. The high was in this, let me just check what that high was. LITs and symbol. The high was 71.52. Okay, it's doing very nicely. The way the weekly chart is acting, if it starts to arch over here, then maybe the next level of resistance will be in the 73s, and then maybe it won't go much higher than that. But in the meantime, what we're looking at is leg D in the weekly chart, only a leg B in the monthly chart. That's very bullish. What was the other one? Oh, uranium. URNM. And we're looking at uranium trading right now. Hit a 71 round number on Friday. Took it out today. Went to 72.66. Looking very strong. Leg B in the monthly chart breakout. I've got this as a leg B, but I better be careful because the stochastic's only at 72%. So right now, I'll call it a G/B. But so far, nothing here that I'm looking at. It says, be very careful. I'm saying it's acting very well, but you've got to be prepared at 70.37 that the 68 to 66 area will be key support if it does pull back here. But I'm looking at this and I'm saying, surely there are going to be a lot of folks that are looking at the market and saying, is this the usual Trump thing? And all of a sudden there's this compromise. And here we are again overnight, usual fear overseas. And now we've got a big pullback. I'm saying you can think that, but you still have to be careful. There's still the tariffs things coming up. You just don't know. So I'm saying, like last week, we're taking some profits, and then we added some positions which actually didn't work because of this overnight thing. They would have worked very nicely, but they didn't. So I just, we got stopped out, small loss. We'll be back. It's just not a big deal in terms of the overall spectrum. What I am a little concerned about, and this to me is quite important, is that the optimism is just not quite befitting my outlook. Let me just, should I do this right now? Let me just see. I got some questions. Let me just finish this. I just wanted to do this to say, look, Bitcoin is down very sharply. But it's been down since October. It's just been a mess. 127,750, right on the Chapman Wave inside track propellant zone. And it looks to me from the technicals, MACD is still good. 9-period moving average is still over the 14. But it looks to me like it's going to be a struggle. It doesn't have to break down, but I think it's just struggling. And upside at 98,000, to break above it is really, it's tough for it to do. So that's out. And Ethereum, that's the question. Ethereum. So Ethereum made that peak C the other day, and I said it's underneath the previous high. I've just got to be a little careful. And it wasn't acting all that great. And I said, if Bitcoin's not acting well, I just don't think that Ethereum can be on its own. Short term, it can. You can have just brief moments where one, particularly in the same category, one symbol acts way better than the others. But it seems to me that it's going to come down to the 27s to test the Chapman Wave inside. If we change the color so you can see it, inside track propellant zone, which will become a repellent zone if, in fact, the Ethereum's, Grayscale Ethereum, starts to trade in the 27s. All right. Now look at this. Let me show you something very interesting. Here's the here's a 120-minute. No, forget it. Here is the 1 minute E-mini right there. Peak A, peak B, peak C. Man, I'm telling you, it's taking a little while to get the exact type of entry for the scale to move higher to that, certainly to leg C. But I'm working on it. So this is your D in the 5-minute chart, and this is your B in the 10-minute chart. And the way it's looking, you can see buyers just want to keep coming in. They're not convinced that this could be a more serious pullback, maybe in price and time, but maybe just in time, just a week or so. Maybe it's price and time. But in the meantime, back at the range, you're down 88 in the E-mini, come back quite nicely near the high of the day. Yeah, near the high of the session, and still finding some buying coming in. Look at that 9-period moving average, how it's moving up. Yep, very nice. And that makes the 6902 200-period moving average in the 10-minute chart a target if this continues. All right, let's get back to our story. The story, wait, where was it? Oh, I had a question right here. could I look at SPY? No, I think that was the second one. Can you look at NVIDIA? So this is to me absolutely fascinating. NVIDIA, you remember I said October was the high in the QQQ? Well, NVIDIA made a high back in the 29th of October. I think it was the same day as the QQQ at 212.19. And then it made a little double top at 211.34, just underneath it. And I said, I don't have the courage. I wanted to do that I didn't even do it myself, to go to the NVDD. That is the 2 times short NVIDIA. Well, look at this. So we're going from October, right? October. Let's go to October 29th, right there. Let's go right there. Is that the 20th? There. So October the 28th, let's call it the 28th. No, you go to the 29th, Canada the 29th. The NVDD is trading between 41 and 40, right? In the interim, it did go high. It went all the way to 42.35, underneath the high that was made of 42.36. 1 penny below it of the high that was made on the 25th of October. Look what happened. It came all the way to the 37s. Now it's only a 30.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstad's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstad releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
This portion of the Tiger Technicians Hour is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day, Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foresight Fund Services, LLC.
So 193.63 was the last high. That was in the end of December for NVIDIA. That was peak E, comes down, arches over, makes a dreaded H pattern today, goes lower than the low of last, I think it was Wednesday or something like that. And in the weekly chart, you can see there's a potential here for a head and shoulders pattern. It's not one of my favorite patterns. I would just say the 9-period moving average is green in the weekly chart. The MACD is weak. The stochastic's weak. Retro strength is weak. On-balance volume is bouncing around, not that weak. So if NVIDIA, any stage of within the next week, so today is Tuesday. Yeah, let's go to next Tuesday. If there's a close below 178, 176, somewhere around there, that 9-period moving average will start to move down, and that makes this really important in terms of just trend line support. Look at that. You've got this trend line support right there. I'm going to put it exactly where it should be, right there. Yep, right there. And that says a close below 173 in January would be a big problem. So I just see, and the upside at this particular point is extremely limited. I shouldn't say extremely limited. I should just say it's limited to the candle of Friday, which went to 190.44. So I'm just thinking that the 190 to 192 area is going to be very strong support if at any point there's a sudden rally. But most importantly, it's not breaking down. It's just holding. It did have that big spike. It looks like a head and shoulders right here. This is kind of a rising neckline. But more importantly, the weekly chart is negative in almost all the different technicals except the 9-period moving average hasn't gone pink, but the monthly chart is still very strong. So remember, daily really is the trigger. It's the one that moves the quickest. Then comes the weekly, and then you get the monthly chart. So I'm just saying it's a process, and the process is it's just been struggling. It was a leader. It's really not a leader per se at this particular moment. Next question came about the SPY 1 minute. But if you look at the SPY 1 minute, the 200-period moving average is at 687.73, and this is at 684.37 right now. That is a long way to go. So the question was, 1 minute 200 moving average, touch and go or breakout. Wow, I would actually do it a different way altogether. I would just look, and let me just do this. Yeah, that's peak A, peak B. We were in leg. There's C, and we're in leg D. So let me just put it this way: we're at 10:34 a.m. Eastern Time. If by, and this is going to be critical, if by 11, so during Steve's show, if there's any sudden burst of strength, that 686 area, we're at 684.37. That's a long way to go. 686. That's what to watch. A break above it says, yeah, now you can start thinking 687.69. But that would imply that everything's looking good. I don't think everything's looking good. And the market is suggesting that it is still rotational. And the fact that you've got your General Motors down sharply, AAA's come back a little bit. You got your GE. Where did it disappear? Good grief. Oh, there it is. Down, not too bad, down $2 something. I'm watching these. If they come back strong later in the day, that's going to be very important. So, yeah, let's go one step at a time, 684.44. Now, look at this. This is the different. Look, here's the E-mini futures. Look at that. Look how I'd used the 200-period moving average as a springboard. Now this is leg, this is leg peak C. This is leg D. Remember, that was parallel, so this is leg D. This is nice action. Look at that. I spoke about it just a short while ago. It hit it exact 69.01. The 200-period moving average just got hit. This is where if there's going to be some resistance. Right here, I'd expect some resistance. And it's a D in the 5-minute chart. Only a leg A. It's unusual. An A. Oh, is that a GA? Yeah, a G/A in the 2-minute chart. So right here, I'm expecting there could be resistance. All right, let's go on. Out there, Google, for what it's worth. Did I skip something? Yeah, so Duncan says MU as Micron from the open goes up 16-ish to 380, then right back down here at 366. I'm noticing that with a couple of stocks that are kind of the real sensitive high PE stocks. So let me just see. MU is trading, makes an all-time high, 351.23 on Friday. Long-legged doji candle closes at the low of the, that's today. Oh, 381.56. Wow, what a move. 381.56 in leg. Fantastic. Leg F and pulls back to the low of the day. Leg E in the weekly chart. Yeah, let's just see. Oh, so I didn't finish my sentence. My sentence was going to be, if during Steve's show there's a rally, and then noontime, just kind of a little meandering, and then during Larry's show, if by 1:20 Eastern time, if there is a rollover, then I'm going to say, be real careful of the close, because that's going to say to me, markets is a little bit nervous about all sorts of things, and that means it doesn't want to hold strongly into the close. Said it wants to take profits as much as it can. Let's see. Next question, VICR, and I have to go back to find out what the question was that I had 2 days ago, and then I forgot to write it in. Did I forget? I think I did. Yes, I did. So look at this strength. This is Vicor Corporation, designs, manufactures high-performance modular power components. Oh, my goodness. It's up 10.95 at 160.83. It's up 7 on a day like this. It got that G. Remember what I always say? When you got a letter C, but it could continue the count from before, put in the G/C, because invariably it's going to go to the D. Lo and behold, it went to the D. There's your D. Very nice action. So let me show you something here quickly. You got your cup formation. I drew this in as a left side, right side price time match. The low was 4 months earlier, but I decided that was the bar. It worked perfectly for the move that earlier on to the 128-ish area, and then it continued high. This is the same leg that's going higher. And where are we right now? The high today is 162.04. 164.75 is the high of November of 2021. In the interim, it had a little bit of a pullback to 30.90, and now it's right back again. Vicor designs, manufactures high-performance modular power components. Brilliant move. Very nice. I'll be back in a moment. Basil Chapman, Tiger News.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019. finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn. And he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Folks, we're back, and we're looking at, so Vital was very good, and a question came in. I'm looking for an exit in UMC. Let's look at UMC. Why do I not recollect the name UMC? What is UMC? UMC, United, if I can read the darn thing. Micro something, electro, okay. United Micro Electronic. The trouble with TradeStation is that they make the headline blue and the print is very tiny and black. That's also my eyes, probably. United Microelectronics Corporation, UMC. Question is, I'm looking for an exit. Cost basis is 9 and it's trading at 10.77. So, Albert, if something does so well, I don't know if earnings came out today, it's up 15%, up $1.47.10. Can I make a recommendation? The monthly chart, it looks just fabulous. It made a rectangle H to M pattern, successful, didn't break the left side low of 2022, somewhere around October in the 5s. And then what does it do? It goes all the way, and now it's this beautiful candle. Now this beautiful candle can become an unbeautiful candle. Can I make a recommendation? I'm going to put UMC, and I'm putting it down at the bottom of the page, so it should last me at least a week if I am careful. UMC at 10.77. Can you do this, since you want to get out of the whole thing? Can you, with a 1-point profit, that's like 10%. In this environment, that's actually pretty darn good. But can I make a recommendation? And that is, take a part of it off. And on Friday, when it was at 9.14, in your wildest dreams, did you anticipate that out of the blue, it hits 10.78 the very next session? I bet you didn't. So this is a bonus. So I'm going to suggest, I love the monthly chart, I love the weekly chart, pick A, B, C, D, it's in leg D, huge gap up to D. Take some off. And I'm not going to give you the percentage. This is just something you got in. I didn't get in for you. You got in, so you've mastered the whole thing. You've done very well. Feel comfortable that you've taken enough off, and if it goes higher, you've still got some in. And if it goes lower, you can make the decision I mean, this is a huge gap, right? Let's call it 920 something to the low of today, which is 1056. So some of it's going to be filled in. So either make a plan that you will go back in, a part of it you'll go back in, and give yourself a number at 10.20, right in the middle. I don't think it's going to fill the gap for a while. Oh, let me tell you something. If tomorrow, whatever the high is today, doesn't matter. If today, except if the high, if it's taken out and you close at the low of the day, that's really not good. But it's at the high as we speak, 10.79. Why don't we do this? No, why don't you do this? Take something off, as I say, whatever number, that's fine with me because it's your decision. But the way I'm thinking about it, in this environment, you've got a stock doing so well. I wouldn't want to get out of the whole thing completely. Now, you could get out of the whole thing and say, I'm getting out, and then name a price that you'd like to consider getting back in. I'd prefer to have you in some of it, take whatever you want off, and then if on Wednesday it makes a higher high than whatever the high is today, and it closes above that, you should have yet another move on Thursday that's higher, and then it starts to pull back. And if it's done that, and it hasn't broken in the next 2 days, if it hasn't nicked even by a penny, 10.73, but it's moved higher, that is great action. And then you could get out maybe a little more if it goes a little higher, because that's even a bonus on the bonus. But what I am saying to you is the way it's acting, I'd keep some because it's a winner in this environment. To me, that's very important. Now, it could be earnings. I don't know if it's earnings. You haven't said anything yet, but it's acting well. So, and then someone said, I put in a 0.19 trading stop. That's another way to do it, okay? I think that's a little tight, 19 cents, just a wiggle and a smiggle, and it's going to do 19 cents for you. I would, 35 cents. Okay, now I see what your plan is. So take something off now and keep enough. It's still in the taking off part of it. There's part A, and then part B has a trading stop. And for fun, you just see where it goes. But as I say, I would definitely keep some of it. Okay, I hope that helps you. Good. And the next question was, is this, that's United Microelectronics, right. Basil, good place to add to the IWM. You know, I had this in my opening paragraph for my subscribers in my newsletter. What I normally do is I just sum up everything, what we're looking at, why we're looking at it, etc. And then I say, and then I give the symbols that we have, and then I put, this is what we're going to buy, like we bought something today, and so far it's up very nicely. And then I take the underline away, and that just says, this is also what I'm looking at. In this case, I had it, and I'm almost sure I took it off. I wanted to say, first of all, I wanted to discuss this chart, which I didn't have on Friday. This is the chart right there, the dark news cloud cover, number one. Number two is I said that, is this an ideal opportunity, a buying opportunity? But I took it away, and I'll tell you why. I want to get that out of my mind. I think that's the mindset that's going to get people into trouble here, because if, in fact, we do start to head down tomorrow and the next day, and you remember, this is all based on the tariffs. And the tariffs are going to be a big deal, even if they come down from 200% to whatever it is. It has an effect, and that effect is kind of negative to the market. So in the I'll put IWN. I'm wondering why this looks so different. IWM. The IWN is the iShares Russell 2000 value, I believe it is. Okay, so let me just put this back again for IWM. Okay, IWM. Yeah, so I would... Wow, I guess at the very bottom this morning in 261.06, here it is 263.92. Maybe that was the thinking I should have kept. I just didn't feel I could do it. I felt I needed to just we wanted to be there in case. Look, the volatility index. I mentioned last week when I was speaking to Tommy last Tuesday, I said, the volatility index for the first time is just flipping positive. And look at this. It's positive, and we hit 20.69 when we were just at all-time highs a few days ago, and this was at multi-month lows, right? So it's just a warning to say insurance is being bought. So if insurance is being bought by fund managers, this can remain a little bit high for a while. But the way it spiked to 20.69, it does leave some room to pull back, but I'm keeping it in mind. So the answer to the question, IWM, if you asked me earlier this morning when I started the show, maybe I would have said, yeah, you could start a position. Here, I think it's a little tricky, and it's got a D. It's a peak D.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento. A pro's pro with over 50 years of experience, Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Hi, folks. Let me just do this for 1 second here. Put that in, and I'll see what I was supposed to do. A couple of questions came in. Let's see. There it is. Oh, ABEV. ABEV, ABEV. I didn't finish this. It's stuck at the 200. ABEV, this is ABEV, SA, ADS. This is this is the liquor, right? So it's got a double top in the monthly chart. It's got the 200 period moving average that's like a magnet at 2.5. ABEV. No, wait, I don't know what it is. AMBEV. Oh, no, this is AMBEV. I don't know what AMBEV is. but it's acting very well. It's down. It's unchanged at 258. Yeah, I do like it. I haven't done homework, but the 200 period moving average of 2.59 is really it's stuck there, and until it can break into the 268 to 270 area, it's just going to be there. But I do like it. It says that the support at 255 should be good, and it's at 255 to 243. If it goes under 255 to 251. If it goes under 250, that's a problem. It'll be stuck for a little while. Yeah, I'll do a little more work for tomorrow, but right now it's holding very nicely. So let me just sum it up. I think that this market is once again rotational. It is going through different sectors. Even today, you've got some stocks that have come back quite nicely that were quite weak, very weak, actually, some of them. And let's see how they hold. Gold is still acting very well. Silver's acting well. I just think this is a rotational moment that says some of the biggies that have been really good can have a bit of a digestive phase, and that's important. And, we're still putting money to work, and we're taking something off. We're taking little bits off here and there. I think it's very important. This is a little bit of money management. Maybe in 3 weeks' time, you'll look back and say, what were you wasting your time money managing when these things just continue to go higher? Anyway, that's what we're doing. We're being somewhat careful here. Dow's down 5.